This short video will show you how to convert a non-income producing asset into an income and pay no tax. John is 68 and an active church member. He retired 3 years ago. With Social Security and a pension, he gets along okay. Still, with the cost of living increases, especially heating oil during the winter, he could use more income. John is an avid hunter and angler. He's waited a long time to be able to do more of both during his retirement. The type of hunting and fishing expeditions he likes are expensive. His other major concern is long-term care. He figures that if he ever needed to go into a nursing home, the cost would exhaust his assets in about 2 years. The long-term care policy that would solve his problem costs $3,500 a year. His dad died 10 years ago and left him a piece of land that at the time was worth $100,000. Lucky for John, the town has expanded in that direction, and the land is now worth $400,000. What John really needs to do is sell the land and reinvest in something that would produce an income. But the capital gain on the land would be $300,000, and the capital gain tax $45,000. It would probably cost him 10% to sell, so he would net out about $315,000. One of John's fishing buddies at church is a financial planner, and he's aware of John's need for more income. Recently, as they were hip-deep in water fly fishing in Montana, the financial planner asked John if he would be interested in selling his land, pay no tax, no real estate commission, if he were willing to make a donation to the church's endowment fund. And he added John would net out about the same as if he sold the land himself, paid the tax and real estate commission. John nearly jumped out of his waders. This would allow him to reinvest in something that would produce an income to offset the cost of living, allow him to buy a long-term care policy, and book more hunting and fishing trips. When they got home, his friend ran the numbers. Well, let's summarize how John comes out after the sale using the planning technique suggested by his financial planner. John sells his land, pays no capital gains tax, and saves $45,000. He pays no real estate commissions and saves $40,000. The $290,000 he receives represents an internal rate of return over the last 10 years of 10.7%. He would have been happy with 6. He can reinvest the $290,000. At 5%, this creates an income of $1,200 a month he didn't previously have. He can now easily afford the $300 a month long-term care premium. He's preserved his assets and achieved peace of mind by covering this base. He has $900 a month left over for hunting and fishing trips. He doesn't even blink an eye at $600 rods and $300 reels. And he has a warm feeling because he gave his church $109,000. This is Bob Cavanaugh with The Smart Giver.